Okay, it's time to talk about retirement and the house you're probably sitting in right now. You know, it's like a lot of people. Your home isn't just where you lived your life, it's where you've built a ton of equity over the years, and there's a lot of memories here. But let me tell you, that equity could be a total game changer when you plan for your retirement. So here's the thing, retirement isn't a vacation. Okay, it's not just, okay, I'm gonna be on vacation now. It's a really big chapter. It's exciting, and it can also be nerve-wracking, okay? So you're done with, regular paychecks, no more, but you have bills. They're still coming in. That's why today I'm going to talk about 5 ways you can use your home equity to make retirement not just manageable, but enjoyable. I love this. So I'm not going to give you just pie-in-the-sky stuff here. I'm going to give you some practical, real-life strategies that can help you create income, save on expenses, and just give you some peace of mind. So let's figure out how to make the home of yours work for you, okay? If you have any comments below, please put them below, your comments. Let me know what's going on with you and your equity and your situation in your retirement. So first thing I wanted to talk about is turning your equity into a monthly income stream. So what could be stressful about retirement? Well, one is not knowing if you have enough money month after month. Yeah, you get your Social Security, maybe you got some savings, but sometimes it's just not enough to feel truly comfortable. That's where your home equity can step in. So have you ever heard of reverse mortgage? I'm sure you have. Now, this is something that I'm not a fan of if you do it the wrong way. But if you plan on staying in your house, this is a way for your house that pays you back for all the years you spent paying it off. So if you're 62 or older, you can borrow against your house equity instead of making payments to the bank, and they'll send you cash every month. Now you can get it as monthly payments or a lump sum or even a line of credit. But the best part, you don't have to pay it back until you sell, move out, or pass away. So I'm not sure if it's good for you, but it is an option. So if you're sitting on a lot of equity, depends on how much, but don't with the pressure of a loan payment, this could be for you. Now, you just say to me, well, I don't want a reverse mortgage. And I don't blame you. There's other options. You can do a HELOC, we call it a home equity loan line of credit. And it does come with monthly payments. So you're better if you've got some extra room in your budget. So either way, your home equity can give you a steady income that you can really enjoy retirement. Next, you can use your equity to grow your investments. Not a bad idea. So what if you make your home equity work harder for you than your home would work, that money would work for you in your home? So if you're thinking of investing, whether it's stocks or rental properties, or even starting a small side hustle, you can tap into your home equity to fund it out. So if you've got, say, a $200,000 equity sitting in your home, you could take out a HELOC or do a cash out refinance and use that money to invest in something. Buy, like, say, a rental property or in stocks, or maybe you wanted to start a new business. What you want to do is the main key here is just aim for investments that give you a better return than the cost of borrowing, okay? So if you're paying an 8% on a loan equity, a loan at HELOC, but your investments are earning 10% or more, that's a win, right? But here's the deal. Investments do come with a risk. The market can go up and down, so make sure, it depends on how old you are and where you want to invest your money, because there's no guarantee you're going to make money. So talk to a financial advisor. I have plenty on my list. I have a couple guys that we work with, and to help you figure out what makes sense for your situation. It's really not for everybody. You got to have a little bit of guts for that. But if you got a little financial wiggle room and some confidence in your investment choices, it could be for you a great way to grow your equity to even more than it would by just keeping it in the house. Next, you want to create a really nice financial safety net, because let's be real. Life can throw you some curveballs, right? So maybe it's a surprise medical bill, or maybe to help out your kids, or even have a busted water heater, or new roof or something. It's nice to know that you have some backup plan. So that's where your home equity can come in as a financial safety net. You only pay if you borrow on it, okay? The HELOC or reverse mortgage, if you decide to do that, can be like a rainy day fund, you want to call it, something like that. The money's there if you need it, but if you're not paying interest on it, unless it's actually, you borrow it. It's like having an emergency stash without needing to keep a pile of cash under the mattress. For an example, let's say the stock market tanks and you're pulling from your retirement accounts to live. Instead of selling stocks at a loss, you can use your home equity to cover the expenses until things recover. All right, that's a good one. This is what pros call managing sequence of returns risk. Basically, it just keeps you from locking in losses when the market's down. So if you think of it as a financial safety net, isn't just for peace of mind, it's where plan A doesn't work and you gotta go to plan B, okay? And having your home equity as a backup can make all the difference. Number 4, lower your housing costs. Here the question is, do you really need that big house that your kids grown up in and now they're gone? I know downsizing is difficult, especially if you have a mortgage and you have a low rate. But most of my empty nesters don't have a mortgage. I think downsizing could be one of the smartest financial moves you make by lowering your monthly expenses. Because if you sell your home, you cash in on the equity that you build up and you move to something smaller, cheaper and easier to maintain. So maybe it's a cozy condo or a house in a quieter area or even renting. The goal is to lower your housing costs so you've got more cash for things that actually you want to do in your retirement, like traveling or hobbies, or maybe you want to spoil the grandkids. That's what we like to do. But if moving isn't your thing, like I said, a reverse mortgage, or he can help you stay put while getting rid of your monthly mortgage payment. Now, you're still going to need to cover your property taxes and insurance, but it could free up a lot of room in your budget by getting rid of your mortgage. The bottom line, retirement is about simplifying and lowering your housing costs, and that's a great way to do that. And lastly, consolidating debts for breathing room, because that's really important, especially if they have high interest rates, because debt doesn't just disappear when you retire, because credit cards and car loans, even those lingering student loans, can still weigh you down. So what can you do? Just use your home equity to consolidate these debts into one simple lower interest payment. So what do? You take out the home equity loan or the HELOC, use that money to pay off your high interest debts, focus on paying back that single one loan. It's like hitting the reset button on all your finances. So if your credit card interest is often if it's 23%, you can roll that into your home equity loan with an interest rate of say 6, 7, 8% or whatever it is. You're just saving a ton of interest and you just have one payment to worry about each month. It's really a stress reliever. We did that. We have everything into our house and that's all we pay, one thing a month. I love it. But here's the catch, your home is on the line. So this strategy will only work if you're disciplined enough about paying it off. It's not about racking up more debt. That's not the key here. It's getting a fresh start. It's not getting more into debt, all right? Think about it as your home has been, your family's base, your biggest investment, maybe your pride and joy. Yes, but now it can be your biggest asset in retirement. So only if you use it widely. So whether you're creating income, cutting costs, or just making sure you've got a really good financial backup plan, your equity can help you enjoy retirement the way you've always imagined. But remember, there's no one-size-fits-all solution. That's why you need to come call me, see what you should do. I'll tell you exactly. So what works for one person may not work for another. So that's why it's important to talk to a financial advisor, talk to your realtor, a mortgage specialist before you make a move. And give me some comments below. If this answered any of your questions, have you been wondering what you should do with your retirement? Send the comments below. Please like and subscribe, share this video. Come back to the other channel, go back to my Real Deal channel where I talk about no fluffs and facts and just general real estate. I've got 5 different channels, one about probate and about divorce. We've got one on our community spotlight and we've got our luxury channel. We've got all kinds of channels. Fantastic to hang out with you today. Have a great day.